Then, Balaji Amines is in focus on the back of its fourth quarter numbers. The company reported strong operational performance for the quarter with volumes up around 4% and operating margins also expanded. D Ram Reddy, the managing director of the company, is joining us now to take a few questions on the quarter gone by and the outlook going forward. Mr. Reddy, good afternoon. Thank you so much for joining us. Well, it's been a strong operational performance and that is what the street seems to like. What led to the margin expansion this time? Was it largely volume led or you've seen an improvement in realizations as well?
Yes, in the year-on-year, if you take where there's about more than 8% on volume growth is there. And what we can see from the last quarter to this quarter, there's about 5% growth in the volume and as well as about 60% growth in the margins. We feel that the bad patch has gone, at least for us, I can say that. Further quarters should be better than this quarter because a lot of the expansions are in the line and some of the plants in the line, and we are coming up with the two plants. One is methylamines and one is dimethyl ether. Both the plants will be coming into the line during this financial year. So looking into all these things, we expect there's a lot of positive things happening in the company.
Mr. Reddy, it's very encouraging to hear say that the worst is behind you. Now, coming to FY25, will you be able to maintain margins or see margins in the range of 20 to 22%? The newer projects that are coming on stream, are they coming at a higher margin profile?
Yes, see, we can maintain this 20 to 23% of the EBITDA margins. And the new plants, we are talking about the product is dimethyl ether. Which is the alternate for the LPG. We feel that this should be the game changer for our products because we being the first manufacturer for this product in the country, and the LPG consumption in the country, LPG demand in the country. So this is going to be alternate for a lot of commercial users. So that definitely will give weights for us in the margin point of view.
Okay, so you'll be able to do margins between 20 to 23% in FY25. What about revenues? The dimethyl ether plant that you spoke about gets commissioned in March 2025. But we do have the methylamines plant that also gets commissioned in December 2024. Considering all the expansions, what will the revenues look like? You had earlier indicated it could be around 2,000 crore rupees. Could it be better than that?
Yes, no. Because of the raw material prices have gone down, we could not maintain that. Because if you see the volumes, there's a growth of 8%. The same way, I can say the coming year, there should be minimum 10% growth in the volumes. And if the prices improves on the finished product as well as raw material product prices, then definitely we should go beyond 1,900 to 2,000 crores.
Okay, Mr. Reddy, let us quantify a little bit more. You've given very strong commentary in terms of the kind of revival you're expecting in FY25. FY25, the revenue guidance that you've given is close to 2,000 crore. FY26, you're expecting close to 3,000 crore. That's significant growth that you're anticipating. And margins, you've already mentioned, you will maintain in the band of 20 to 23%. Can you reiterate the top line, the margin, as well, if possible, the bottom line guidance for FY25?
Definitely. See, that depends upon the prices. The last 2-3 quarters just started improving. If the trend goes like this, definitely we will improve this 20 to 24% of the EBITDA margins. And yes, the 2019 to 2,000 crores of the top line for the 25 and 3,000 crores for the 26.
Okay. All right, so 3,000 crore rupees of revenues in FY26. What is the capex that you're incurring on all the new projects that are coming up? There are quite a few of them actually that you've listed. How will you be funding it? On standalone basis, you're debt-free, but on a consolidated basis, what will your balance sheet look like?
See, consolidated basis, there's only 20-25 crores debt is there in the total, which is on the subsidiary. And whatever we are doing, most of the things we are doing with our internal accruals only. Majority of the expenses already done on the methylamines. There's a little happened in the dimethyl ether, and there will be about 150 crores on these two plants left for the current financial year. And the new plants which we are talking, maybe 50 to 60 crores will be spending on that. Total about 200 crores capital expenditure will be there. But entire thing will be meeting from the internal accruals. We are not going for any debt, at least for the current financial year. Maybe for the expansions in the our subsidiary, we are talking about 750 crores expansions in the phases manner. First phase, we are going about 300 to 400 crores, where we may need about 50 to 100 crores debt at the end of the year we may need. Otherwise, entire debt capital expenditure is met from the internal accruals.
So all of the capital expenditure that you envisage will come in from internal accruals. Thank you so much, Mr. Reddy. That's all the time we have today. There are a lot of earnings coming in, but we thank you for your time and wish you all the best for FY25. As we speak, the numbers of Asian Paints are